given how one-sided this market had become a little bit earlier this morning.
It's actually possible to price in what happens in terms of this conflict in the long term. To your point and Jumana's point about the
$1,000 an ounce, had dropped to at one point 4,099. But right now it's back up to 44.14. So Dumont Mining gaining ground. CF Industries, which is a fertilizer trade, down still 6% as fertilizer turns around and drops in price as well. The prices, of course, have been elevated due to the closure of the Strait of Hormuz. Let's bring in Chief Investment Officer Amanda Agati. And Amanda, the purple haze of policy was your theme for last year, and now it's very clear the purple haze of course driving all of these assets. How do you invest in this kind of asset?
Well, Matt, it's great to be with you. Good morning, as always. You've gone from purple haze of policy uncertainty to a deep purple reference, I think. Geopolitical risk and conflict in particular is hitting a fever pitch here. And I think investors are just going to continue to get whipsawed for a while. I'll give you another fun musical reference. It ain't over till it's over. Despite what the post this morning say, there's just some conflicting reports. I think the best way to play it is to stay nimble, stay very well diversified, and buckle up because the high volatility regime is likely to continue. It's not fancy, but that's the best way to play this environment until we start to see some settling in terms of the conflict.
When you get these headlines, and let's just take today, you get these headlines and a market rallies, risk rallies, because we're up 1.4% on the S&P. How do you decide whether that's a move
They're very respected. And maybe one of them will be exactly what we're looking for. Look at Venezuela, how well that's working out. We are doing so well in Venezuela with oil and with the relationship between the president-elect and us. And maybe you find somebody like that. The price of oil will drop like a rock as soon as it's done. I guess it already is today. No, we have a very serious chance of making a deal. That doesn't guarantee anything. I'm not guaranteeing anything. I'm not going to come out here in a week or 2 weeks and have you all say, "Oh, you said." I didn't say anything. All I'm saying is we are in the throes of a real possibility of making, and I think if I were a betting man, I'd bet for it. But again, I'm not guaranteeing anything. They want to make a deal very badly. Thank you. What changes would you like to see in DHS under Berkeley Mullen? Well, he's going to be fantastic. He'll make it so change. He's already given me a list of people that wants to bring. He's a fantastic guy. I think he's just the right guy. You all know him. He's a very open, smart guy, very successful actually in business, but people don't know. And he's a friend of mine. I think Mark Wayne is going to be fantastic. Thank you.
242.3.
They made a mistake. It's a dangerous business. That's terrible. Thank you.
Bill's President Trump on tarmac Washington. He's had the Air Force commentary on what's going on and other topics. He says that the U.S. has held two talks with Iran and postponed strikes for 5 days. Iranian media denied that negotiations have taken place. Brent crude dropped as low as $96 a barrel before coming back to $100. So Ross comments there will have more reporting on that. This now is the Bloomberg Intelligence Program. It is called radio studios in New York City. We're streaming live on YouTube and on Bloomberg.com as well. We're going to get right to the news coming out of the Middle East. We're going to check in with Dan Williams, Bloomberg News. He's based in Jerusalem. Dan, who's talking to who? Who's standing down? Who's not standing down? What's the latest reporting coming out of that part of the world?
President Trump is always talkative, and all the more so during this development that's really been dominating the world news flow over the last 2 hours, no more than that. What we are seeing is brinkmanship in search of a breakthrough. Basically, the revelation by the president just 12 hours before the expiration of his ultimatum on Iran to open the Strait of Hormuz or face U.S. attacks on its energy assets, on its power stations. As that deadline was looming, the president coming out with announcements that there had been 2 days of talks, presumably behind the scenes. Obviously, no one knew about these, and that as a result, he's pushing off that deadline by 5 days to enable talks about potentially ending the war. And we've just heard him now at a live media fray elaborating on that. Now, it's worth remembering that throughout these last 2 hours, the rat-a-tat of updates, mainly from the U.S. president, and of course, the ensuing rocking of various world markets, which have been stabilizing and then experiencing even stabilization anew with each revelation here. Iranians have been denied this. They denied there is such talk, and indeed have been openly scorning through official media the U.S. president, saying this is basically a climb down, that he realized he could not work through brinkmanship when it came to the Strait of Hormuz, given what appears to be Iran's willingness to respond to any attack on its power stations, with attacks on power stations throughout the region, potentially putting much of the Middle East into darkness. So we have the U.S. president saying these talks are underway. He said the talks are with a senior member of the Iranian regime, what remains of it, not the supreme leader. And he says that he's hopeful for a breakthrough. He wants a deal. He did reiterate the core position of the United States, echoed by Israel, that a deal should end uranium enrichment, should deny, presumably permanently, or for the very foreseeable future, any access the Iranians might have to weaponry. And there is some wriggle room around what would happen to the Strait of Hormuz. It would appear that that chokehold on international energy is what has brought the U.S. president and potentially what remains of the Iranian leadership to this place, potentially on the verge of a breakthrough.
Yeah, thank you for wrapping all of that up. And as you mentioned, Iran has said that it did not have direct or indirect communication with President Trump. the president then said the US is talking with a quote, top person in Iran, but not the supreme leader. What do we know about other countries' involvement and any kind of back channel discussions with Iran? We're talking about, Turkey, Saudi Arabia, Oman. Are they involved? How involved are they?
By every account, yes, they have been involved. These are countries with obvious interest, energy, and other geostrategic interests in not seeing a very further spiraling war. Keep in mind, we're now in the fourth week of the war, that while both the Americans and the Israelis, who launched it in concert on February 28th, say it's been going according to schedule, and in fact, ahead of schedule in some respects, and they're willing to go it for another several weeks. The Iranians have said from the outset that they have budgeted arms and other assets for a 6-month war. There was no sign of the Iranian regime collapsing. The Israelis and the Americans would hope that at some point in this war, with enough damage inflicted on the regime, there could be an upswell, a groundswell of opposition within Iran to remove a weakened regime organically, including last weekend during the Persian New Year, which is generally a time for holidaymakers and festival goers in Iran to come out to the street. Obviously, that didn't happen now in the midst of a war, but there was hope that might mark a change in the situation internally. It didn't happen. It would appear that the US president is doing a recalculation, given the spiking rise in oil prices, given the lack of international support other than Israel militarily, breaking that gridlock over the Strait of Hormuz, given the doggedness event so far by the Iranian regime. He's perhaps doing a recalculation. It's worth remembering, this is quite a wily president. He's known to be reason, tactical and strategic. It could be, and this has already been speculated on by some of the Iranian media, that this is another ruse, another attempt to bring down Iran's guard. Officially, the US position is now the deadline that was to be 10 hours from now, has actually been put off by a few days. It's now 5 days hence. So we haven't pushed away the specter of escalation. As far as the Israelis are concerned, the war continues. In fact, they carried out another attack in Tehran just an hour ago. So one, without some sort of confirmation, without some sort of corroboration and open statement, potentially and preferably on record by the Iranian leader, it's very hard to know how solid this overture by the Americans are. I imagine that will come through in the coming hours. The Iranians will be doing their own calculations as to whether this is a breakthrough that should be embraced and put forward until it's solidified, or whether they're going to stick by what appears to be their official position, that the US president is effectively backing down, effectively admitting defeat. It's worth remembering that whatever the domestic staff of the Iranians are saying, that their beleaguered regime, the beleaguered population of 3 weeks before, this isn't a president who takes such slights lightly. Right. You may see a grievance in them. They just want to reconsider that if they are considering the potential for a breakthrough.
Dan Williams, thank you so much. Dan Williams for the comprehensive summary of what's been going on in the Middle East. He is one of our Bloomberg reporters based in Jerusalem, so we go to him to get the on-the-ground reporting.
Great reporting, I appreciate that. Right now, let's get a little bit of a reset here. Markets are rounding. Checking the Alexis Christophers and Bloomberg. This is
Thanks, Paul. A possible de-escalation in the war with Iran is sending oil lower and stocks higher. President Trump has postponed strikes on Iranian energy infrastructure for 5 days as the U.S. and Iran enter talks to end the war. Iran's foreign.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Escalating threats. President Trump gives Iran a 48-hour deadline to reopen the Strait of Hormuz or face strikes on its power plants. Tehran threatens to completely close the waterway if attacked. Deepening global rallies. Asian shares are set for a correction as they fall for a third day, and bonds sell off as the war raises the risk of higher inflation, slower growth, and interest rate hikes. And oil fluctuates near the highest close since mid-2022 as traders assess U.S. and Iranian threats. The IEA says the current disruptions are equivalent to 2 major oil crises. Well, it's just gone 9 a.m. across the Emirates. I was one of Versace in Dubai. It is day 24 of the Iran war. And again, once again, no signs of things letting up, with President Trump giving Iran that 48-hour ultimatum to reopen the Strait of Hormuz, or else they would target power plants. Iran defiant in response to that. So we're going to run through the latest from the weekend at this moment. But of course, global markets are reacting to some of these developments over the course of the last 24 hours, 48 hours. Asia Pacific had over deeply negative today, down 3.3%. And this after a pullback from Wall Street yesterday on Friday as well. We saw a negative close for the S&P, for the NASDAQ. And again, there on really the investors and markets beginning to price in the possibility of a prolonged conflict, a long road on that component for an additional couple of weeks. As opposed to a short resolve or a wind down, which is what President Trump initially hinted at on Friday evening. Now, Brent, obviously, all eyes still on the energy complex. We are trading at around $113, just shy of that, up about 0.5%. Just noting, and my colleague Harry Curtis found this fact to me earlier in the morning, that if you look at the context further out the curve, so the latter days, where you're beginning to see some of the later date contracts beginning to react as well, i.e. the curve is becoming slightly less backward dated, just another manifestation of how investors are beginning to price in a protracted war. Some of those longer dated contracts are beginning to get a bid as well. So keep an eye on that as well. So interesting today to note that it's down 2.5%. So it's loss after loss for gold, which is interesting in this environment. Up until the start of this war, it had been one of the major beneficiaries of uncertainty around, but actually since inception, it has underperformed, which is interesting, especially as markets now are shifting towards pricing and interest rate hikes, and that has not been good for gold and for silver. And speaking of, take a look at where the 10-year yield is sitting right now, 4.40. We are up substantially over the course of the last couple of days. On Friday alone, we saw really, I would describe it as a meltdown for bond markets globally. So from Europe to the US to the UK, moves of more than 10 to 15 basis points at some of these intermediate ones, and also the front end as well. Some of those 2-year yields are really repricing to account for the possibility of rate hikes. So you look at 2-year front end, for example, 90 basis points over the course of this war. But switching over, because we've had so much volatility in the markets, take a look at the news index. This is the underlying volatility index on interest rate swaps. And you'll see that for a while, it had not really reacted to the news that was coming out of the region. That all changed towards the end of the week, last week, and it has surged the most in over a year. So that is that noise index, and really just encapsulates how much volatility we're seeing in bonds and across markets from that of the Iran war. Okay, let's also check in on how markets in Asia are faring. Winnie Stu is in our Hong Kong studio. Winnie, I sort of give that headline here, which is that the Canada has been quite negative. Give us some more details.
Yeah, morning, Joanna. Exactly. It is a risk-off day, and especially with that ultimatum being less than 24 hours at this point, we are expecting that to come tomorrow morning in Asia hours. So you can really see the sell-off across assets, specifically for equities. Like you just mentioned, MXAP down about 3%, headed into that correction territory. But yes, we are pretty down for the past 3 weeks, and now just about 1% away from erasing all gains so far this year. Also in the technical correction territory is Japan's Topix index here, down more than 3%, as Japan did a catch down after coming off from a holiday on Friday. Now you have the dollar strengthening a bit, and hence that's also pressuring the FX market here in Asia. As you can see, Asia's currency index here down about 0.2%, and that is now around that lowest level since December. And across the board, lots of weakness, and specifically highlighting the Korean won here, which is now about the weakest against the dollar since 2009, despite that nomination of the new Bank of Korea governor, who is actually seen to be quite hawkish. Back to you, Jumana.
Winnie, thank you so much. Winnie Stu in Hong Kong. Well, our top story today, the war in Iran is entering its 4th week and showing no signs of de-escalation. With the US and Iran trading threats, President Trump has given Iran 48 hours to reopen the Strait of Hormuz or face the bombing of its power plants. Iran has countered the threat with one of its own.
If US threats regarding Iran power plants are carried out, the following punitive measures will be implemented immediately. The Strait of Hormuz will be completely closed and will remain closed until our damaged power plants are restored. All power plants, as well as the energy and information and communications technology infrastructure of the Zionist regime, will be extensively targeted. All similar companies in the region that have American shareholders will be completely destroyed.
For more, we're joined by Stuart Livingston-Wallace, our executive editor for MENA and Russia. Stuart, a clear example of escalation dominance here. The US are threatening Iran to fully reopen the strait or else they'll attack power plants. Iran saying that if they do that, then other infrastructure sites in the region are going to be at risk once again.
Yeah, and I think not to be taken lightly because you've seen exactly the same pattern over other regions. So specifically when South Pass were hit, there was this retaliatory response against Ras and other energy infrastructure. There was an additional thing here too, which is the one we're not quite sure how seriously to take it, but there was an additional threat of anyone that buys or holds US treasuries will also be a target within the region, which is sort of pretty much everyone. So going forward, we are only several hours now away from the deadline. We think it's probably around 4 a.m. our time tomorrow morning, and we'll see what happens after that. But there are something like 100 operational natural gas-fired power plants within Iran that the US could potentially target. And remember, this was a country that was suffering some pretty severe energy shortages as it is. So it's quite a serious threat on both sides.
One of the reports that came out on Friday, we've written about it, suggests that the US is weighing up sending troops and Marines to the region to take over Clark Island. What do we know about the developments there?
I mean, it seems to be one of several options that they're weighing up, and it really all comes down to reopening Hormuz. So you did see some attacks, for instance, on Iranian installations around Hormuz at the end of last week. You've had calls for some sort of international armada, effectively, to try and reopen the strait, although the response on that from the international community has not been overwhelming. And this appears to be yet another plan to potentially what you see, and again, I do say potential because nothing's been decided as far as we can tell, is to go in and seize Clark Island. That's about 90% of Iranian oil exports, something like that. But that raises two very serious questions. One is that is boots on the ground, which is something that had not been previously contemplated. It puts US forces at a much more severe risk. And thirdly, there are some questions about how effective it would be. Clark Island is hugely important for Iranian other exports, but they are not the only avenue that it has. So it has other terminals in the Gulf and in the Arabian Sea. Now, that would severely diminish the export potential, but it would still take something like maybe 1/3, 1/4 of where exports are now. And we know for a fact, because of many years of terrible sanctions against Iran, that it can survive on a trickle of revenue from oil sales. So how effective it will be is really an open question.
Stuart Livingston-Wallace, our executive editor for MENA and Russia. Thank you so much. Well, for a deeper insight into how markets are faring, joining us is Stephen Major, Global Macro Advisor at Tradition Dubai. Steve, really good to have you with us. I'm going to start with the massive move that we had in bond markets, which is how I open up the show today. What do you think is going on here? Is this purely a positioning out, or is it genuinely investors accounting for the real possibility that central banks may have to hike into this inflation shock?
Sure. That's good point, Jemana. The fact that we're both working from home tells you part of what's going on here. The facts have changed, and positioning for sure is something here. But late last week, you know very well, it's been reported that there was an escalation in the region around several key tipping points, really. So there's the Strait, the question of its reopening, and then the attack on Qatar, which I think had a big impact on production capacity globally. So central banks, when they were meeting last week, they had some information. There was new information coming through as they were meeting. In terms of scenario analysis, if they were fading a baseline for an adverse scenario, for example, they're probably tipping towards something even more severe. And I think markets got hold of it because a few weeks ago they were talking about the spectre of stagflation. That's now becoming a bit more of a base case. And so markets have to adjust. And of course, many people have seen, many investors were favoring the front end at the start of last week. Those positions have been washed out. So the move has been exaggerated by positioning and the change of narrative from central banks.
Steve, at what point does the conflict shift or people's perception of the conflict shift from, or the war shift from it causing a temporary spike to inflation to perhaps more knock-on effects more broadly, and one that actually would incentivize central banks to act? Is it, 3 weeks, 4 weeks, 6 weeks? Is there any specific time frame that actually triggers a change in thinking?
All the discussion around the extent of the damage and time periods, but everyone's just guessing. Markets are moving in real time, and they're adjusting their probabilities and scenarios. And right now, the reality of this will be some temporary conflict, and the oil price move will be a spike. That looks to be in the rearview mirror. We're now preparing for the oil price being at a much higher level for a much longer time, the same with gas prices, and the idea that this would be a 2, 3 or 4 week conflict and then over doesn't seem to be a base case right now. So what we are actually witnessing escalation is actually happening.
Yeah, and Steve, we talk about the potential for global demand destruction as well. And already you're seeing some elements of behavioral adjustments in some Asian economies, even European economies as well. In the case of Europe, what do you think is going to be more dominant? The hit to growth over the medium term, or the inflation spike?
Well, you're quite right. The Asian economies are going to look at the oil price in a different way. In fact, I think that the price of the barrel of oil is clearing at a higher rate in some Asian countries than it is elsewhere. But for Europe, for example, I think that from the ECB's perspective, inflation is clearly something they're looking at, and their severe scenario has inflation above 6%. That means they have to act, and so I think that inflation is at the front of mind for central banks, especially those that felt that perhaps they were a bit behind the curve in 2022. So there's the kind of scarred central banker that doesn't want to make the same mistake as in 2022. So it looks to me like in the near term, it's the inflation that goes up faster than the growth goes down, but you do get a growth hit. And it starts to look a lot more like a stagflation scenario. I'm sorry to say that because I talk about it hoping it's not going to happen. I wrote about it a couple of weeks ago, again, thinking of it as a scenario. But markets are moving real time to price these things in, and we cannot dismiss that stagflation scenario.
Your new basic email design platform. Create stunning email without touching a single line of code. With our editor and keyword templates, getting started couldn't be easier. Start designing today. For the stagflation scenario, is it, again, one of the consensus trades at the beginning of this year was the steepener. In stagflation, will we continue to see this trend of flattening?
Yeah, so the steepening trades have been largely washed out. There may be a bit more to go. I think that in the stagflation scenario, you get the bear flattening first, which is what we're seeing now, because the central banks are responding with narrative, if not actual rate hikes. They hiked in Australia and Iceland last week, but the other central banks are preparing to hike. It could be as soon as April, or sounds of it, April, May, June. So that's a complete shift from a few weeks ago. So in a speculation scenario, the initial move is that that speculation takes hold. It's going to be the back end that really suffers, and you're going to steepening of the curve. But we're in that third phase now, which is the bear flattening.
I think for me, for global macro advisor, Sebastian Dubai. Thank you so much.
We got Monday morning
For the war,
through the New York.
this is Wilbur.
Got the 11:33 month bill auction, as well as the half year. It's 11:30. I think we had much today. Just so far. Evens.
They have said that debris has
This is it here.
facilities
Full break evens here. Yeah.
that they have made temporary operational adjustments
So decided to
traded liquids in response to according to a filing
and
on this
tax and that drove oil shot down.
temporary adjustments production, and that is from gas over here in the UAE. Now, in its fourth week,
The futures market shot up this morning on that news to hear us.
Iran present Switzerland.
Went up since the opening.
Some is vowed to obliterate Tehran's bonds unless the waterway swiftly reopens. The closure is causing ripples beyond the region, evolving into a global fuel crunch.
I see that there is a growing problem in Asia, many problem in Asian countries, and this issue, especially in the context of products. These fit more and in Europe and beyond. It is coming true, of course. Again, countries have their stocks. We have our stocks, and we are incentivizing many countries with refineries to move faster than they normally do.
That was Dr. Bureau, the International Energy Agency's
Itself now.
founder of Zanda Insights. Later on in another part of that interview, Fatih Bureau was talking about that this is the biggest energy shock that market has seen, even surpassing that of the 70s, because it's a twin. It's both gas and it's oil, as we just heard now. Recent developments also from the UAE. Do you think oil markets, let's start there, are underpricing the extent of the supply shock?
I think the global oil benchmarks still are. Brent.
It's like aggressive buyers in this level have been absorbed.
WTI obviously.
Necessarily mean a reversal. I mean, these are if it's a bullish since the opening, so it could easily come back. If aggressive buyers come back and take this high,
Much higher premium.
moving high here, and we can easily just rally back up. But get absorbed here.
As sort of refiners are scrambling, they're paying even more than this. So my assumption is if the Strait of Hormuz stays effectively closed, that we will see oil prices continuing to grind down. And that's even with the Strategic Petroleum Reserve releases and some of these new sort of sanctions exemptions, just because the scale of the effective outage sudden production is so much.
Yeah. Rachel, are we likely to see more energy nationalism, and that you're going to see more and more countries, put export controls on refined exports, on some of their actual crude exports? In the case of the US, and they've ruled it out for the time being, but I do wonder whether this is going to cause another wave of energy protectionism around the world.
It's definitely a risk. We've seen a number of the Asian countries that are sort of refinery, sort of have refinery capacity, put restrictions on temporarily. Like
Fix us going back. This liquidity So the sweet beer,
Australia and Singapore coming up with an agreement that's
beer coming in.
in the Asian time to provide, to sort of allow some product markets, sort of dynamics. I think we could see countries swapping different supplies. Australia, of course, an important supplier of LNG, maybe swapping LNG in exchange for any products. Where the U.S. is concerned, I would be watching especially oil products, diesel, gasoline, jet fuel, and the like, rather than crude oil, of which it has plenty, and even natural gas, of which it has plenty. If anything, there's not enough liquefaction capacity in the U.S. to scale up LNG exports, and that's one of the things cushioning the U.S. Natural gas markets and power markets compared to the rest of the world.
Let me ask you as well, is it your expectation that Asia and other parts of the world will have to resort to less clean?
So this is ranging.
Many.
And, a lot of the buyers in gold and Nasdaq have taken profits and swinging back down. So it could range for a bit here before lunchtime. Well, you got another hour for the news.
We will see that shift. We had been seeing that trend, especially
We're gonna get another setup here before the news.
emerging Asia in particular. That had been a trend already happening, moving to sort of coal on the one hand and renewables on the other hand because they're cheap, but it's not easy to install renewables immediately. And I expect we might see some emission standards and the like relax. I wouldn't be surprised to see that in Europe as well. The focus is really going to be on what is available locally, what users can get their hands on. And I think we're also going to see some forced and implicit demand destruction as well. Some of the countries were quite quick off the mark to try to encourage people to turn ACs off and to and we can. But this is going to be this is going to be a larger shock. Over time, I do think we will see on the power side more renewables, and some emerging economies and frontier markets were already being priced out of LNG, and we're turning to solar. That medium-term trend is probably going to continue, but typically when oil prices spike, when interest rates are high, that's not great for the installation of renewable energy either. And I am watching to see how the UAE, a major foreign sort of supplier or investor in renewable energy, as well as other energy around the world, sort of how some of those projects continue. In the short term, we might see some stalling, some holding off on new projects.
Rachel, thank you so much. Rachel Zamba, founder of Zamba Insights. Now, for a look at some of the other stories we're following today, UBS Group Chief Executive Officer Sergio Motti says energy prices are likely to remain elevated as investors digest the impact of the Middle East conflict on the global economy.
Are likely to stay high for the foreseeable future, putting some inflation pressure and also some pressure on the delivery chain or on the supply chain, and in that sense, also the situation is a little bit unstable.
A federal jury has found that Elon Musk defrauded Twitter investors when he disparaged the company in 2022 in an effort to buy the social media platform for a lower price. It was original $44 billion. While the jury rejected some of the fraud claims, Musk now faces potential damages totaling millions of dollars to be paid out to affected shareholders. Musk's legal team plans to appeal the decision. Next, coming up with Goldman Sachs warns the Iran war could deal significant blows to both economies. We'll speak with Fedel Sousa, senior economist at Goldman Sachs. Next, this is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Escalating threats. President Trump gives Iran a 48-hour deadline to reopen the Strait of Hormuz or face strikes on its power plants. Tehran threatens to completely close the waterway if attacked and strike back at key energy and water infrastructure. Deepening global drought. Asian shares are set for a correction as they fall for a third day, and bonds sell off as the war raises the risk of higher inflation, slower growth, and interest rate hikes. As oil fluctuates near the highest low since mid-2022 as traders assess U.S. and Iranian threats. The IEA says the current disruptions are equivalent to 2 major oil crises. It's just gone 9:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. While the Iran war day 24 creating global turmoil in these markets. The handover from Asia Pacific decisively brisk off today, and deep declines there down 3.5%, and very close to correction mode. So pullback of 10% for the broader Asian index. And also, I should say that the Wall Street close was also negative as well, as investors really come to terms with the possibility of not just the war and the immediate impact to energy supplies, but also the real possibility of a protracted war that could go on 4 weeks. And here we're not just talking about flow disruption, but actually potentially some energy destruction as well, with some of the damage that has been leveled on these key energy infrastructure sites. So that is the theme going into this week. And Brent is trading just shy of $113 here. We're up about 0.4%, so levels not seen since 2022, but of course still a lot of risk premium baked in and uncertainty about the outlook ahead, especially with the straits continuing to be effectively shut or under Iranian control. And gold also slipping once again down 3.7%. It continues to drop, actually, which is interesting, pulling back as investors start to account for a rate hiking cycle out of central banks. And that is obviously manifesting with where 10-year yields are trading and more broadly across global fixed income markets. Right now, 10-year yields at 4.41. We moved up about 11 basis points on Friday. Similar moves for other global fixed income markets as well, as there, once again, investors price in for stickier inflation to come and the reaction function, possibly more hawkish reaction function coming out of central banks. So let's switch over just to encapsulate how much volatility we've seen in these global fixed income markets. This is the MOVE index, and it essentially tracks options volatility on interest rate swaps in the US, so specifically to the US. And you'll see that for a while it was sort of not doing that much, but all of that changed in the last week, and we started to see real unbuckling of some of these fixed income positions.
They'll try to get back when the news just
consensus trades going into 2020.
Nasdaq are ranging now. Trying to come back down. More fear in the markets.
Being priced into one market,
Taking back.
both markets really still isn't for us when you break down the price action condition today.
Further than all.
Flawless. Start improving your fitness.
Hearing from investors in Asia that they are trading equity exposures and also trying to secure liquidity ahead of this deadline from President Trump within the next 24 hours or so. So hence you are seeing MXAP just mentioned heading into that correction territory along with Japan's Topics Index, which is down about 3.5%. We had the holiday on Friday, so a bit of a patch down there. But also when we are looking at MXAP, just about 1% away from erasing all of its gains so far this year. You just mentioned gold as well. That is also around that level. Now, you put the board and take a look at the fixed income space. You just mentioned that global bond sell-off For example, here we are also looking at Japan 10-year yield up about 3 basis points, taking us to the highest level around the 1990s. So that is also pressuring the Japanese yen, which is still hovering around that 159.5 level against the dollar. And when it comes to the Korean won, also seeing quite some bit of weakness, even after we just nominated the new Bank of Korea governor, who is seen to be actually on the hawkish end. The yuan here also slipping just a bit with that weak fixing coming through from the PBOC. Back to you, Jemana.
Winnie, thank you so much. Winnie Sue in Hong Kong. Well, oil prices are near mid-2022 highs as investors wait Trump's ultimatum to Iran. In the context showing no signs of easing, the International Energy Agency's executive director, Fatih Birol, says the energy shortfall dwarfs the oil shock of the 1970s.
Only as of today, we lost 11 million barrels per day. So more than 2 major oil shocks put together. Plus, after the Russia's invasion of Ukraine, the gas markets, especially in Europe, we lost about 75 billion cubic meters, 75 BCM. And as of now, as a result of this crisis, we lost about 140 BCM, almost twice.
The context there from Fatih Birol, the IEA chief, and one of the energy reporter, Anthony DePaula. So we heard from the IEA chief just sort of describing how big a moment this is for energy markets. But Anthony, coming up, we're heading into what could be a crucial 24 hours with President Trump threatening to strike power plants in Iran threatening to retaliate as well. And how are oil traders, how are energy investors doing what could happen in the next couple of days as it pertains to energy infrastructure?
Good morning, Jemana. Yeah, those threats, one against the other, the tit for tat attacks, that's kind of the worst case scenario that energy markets could